Ayun, na-execute na, bumagsak na dun yung market sa so, kung saan siya nag-execute. Makukuha mo yung price na gusto. Bumagsak pa.
Okay, so let's get started. All right, guys. So it's Monday, and we have a holiday today. The UK is closed for a holiday. I'm not really familiar with the particulars on why it's closed, but UK was closed. Japan was closed today. So it's been, I would say, a boring trading day. Now, that kind of uh, contrasts what happened to us last Friday. So Friday, we said before that normally you get the jobs data from the US on the first Friday of the month, and we ended up with some mixed numbers. Still, we got another surprise in non-farm, 177,000, although the previous figures were revised lower. Initially, I think this was around 228,000, and then we have it revised down to 185. But still, that isn't too bad for the US. Unemployment rate remains steady at 4.2%. Your average hourly earnings was slightly below consensus forecast, but not by too much. So, how did the market exactly respond to this? Well, if you look at your charts, you'll see that long wick in your euro, in your GBP. So essentially, the initial response was to weaken the dollar, but eventually we saw the dollar recouping a good chunk of its losses against the euro, against the British pound, even against your Japanese yen. Although your commodity currencies, well, did see a bit of strength. Now, without anything in the calendar for today, this is going to be a highly technical, highly chart-oriented market for us today. And without further ado, let's get started. And as usual, let's examine our euro to start things off. So what do we have in euro? Big picture, you have that nice uptrend. What happens if I draw some trend lines? Let's just see how these trend lines would turn out. Because I'm thinking, aren't we near some form of trend line at this point? So let's just see your, oh, sorry. Let's just see your accelerated trend line. So not quite there yet, but we do have that attempt at a bounce happening right now. So without anything in the calendar that will change, that will likely change market's opinion about where things are going, I would say this is one of those days when we're gonna expect limited ranges, and this is one of those days when I would go look for keeping inside the previous consolidations. All right, so no data. You have an uptrend, although you've consolidated a bit for the last for the past week. When we go intradays, how does things look? Uh, it looks indecisive to me. Here's your initial response to NFPs and then the subsequent drop to it. Remember before we said that, if it's not really incredibly outside of expectations, if it's mixed, then you tend to think in terms of mean reversion. The currency will go back to where it came from, maybe even exceed it a bit, if the catalyst that led to the price action isn't really something to write home about, meaning it's not a very important the difference between forecast and actual results are not that big. All right, so what do we have then at this point? Earlier in Asian session, we were consolidating and we have our euro dropping right now. If I look at the chart, intraday, we find what? We have a nice consolidation here, so let me just change that. We have a nice consolidation here, so that should act as a support level for us. Let me draw some fibs as well. What kind of Fibonacci pullback do we have for the upside that we've seen since the open of the market? Looks like 61.8 fib retracement is right around or just above the consolidation highs from late Friday, early in the trading day. Okay, so nice 61.8 fib there at your 1.1311 area. I'm not going to expect any big bullish bounce of 61.8 fib immediately. As we said, the UK market is closed, the Japanese market is closed, so liquidity today will come in really only during the New York session. So what should we be expecting then? I'm not going to discount the possibility of actually going back down to your earlier lows for the day. So it seems to me that our strategy for euro today will be to think in terms of, let's stay inside this broader consolidation. Let's stay inside this broader consolidation. And as we approach the lows of that broader consolidation, let's go look for signals that says we can buy euro already. So we're not in a position to do anything. We could even potentially get to this area here. But if at this area around 1.1311, again, you know me, if I start seeing these hammers or dragonfly dojis, then I would be a willing buyer of euro at that point. But until then, we're not going to jump in. We're not going to do anything. What if we don't have hammers or dragonfly dojis? Well, I would also consider, if you see a consolidation, candlesticks like this, look like this, indecision, indecision, indecision. Okay, so if we see some indecision here, meaning sideways action in the hourly candlesticks, and then one of them sticks out, one of them closes above the highs for the prior candles, then that's a bullish engulfing. And at that point, if we see something like that, then that's an excuse to consider going long already. So for now, guys, there's nothing immediate as far as our euro chart is concerned. Under these circumstances, best to wait for the better prices before taking the buy side. We are bullish. We tend to think that you're near the lows of this is your broader consolidation. Okay, we tend to think we're near the lows of that, but you don't have a good enough price, you don't have signals that says that bullish momentum is about to kick in. So for now, folks, no action for us. Just allow other traders to take euro to ideal price levels and then wait for the signal that says momentum has kicked in. Wait for the signal that says this is going to turn higher already. And for now, we do not have that. Okay, so let's take a look at other charts. I was thinking about going cable, but it is a holiday in the UK, so maybe not your cable. But how about Aussie? So Aussie looks pretty interesting because the Japanese market was closed. We seem to have had limited price action, although Friday was a big bullish breakout. Okay, Friday basically you engulf the previous price action. But let me see this big picture. So here we are right now above this previous consolidation. So I guess the question is that something that's going to hold? Well, let me see big picture first. And how high can we get big picture? Big picture looks like you've got room to go until you see your October 2024 highs. And that October 2024 high seems to be, yeah, that seems to be highs for the last 2 years. Okay. So what do we know about Aussie? Do we have catalyst? Calendar wise, you had, okay, nothing. Yeah, you had some secondary numbers, ANZ job advertisement numbers. Nothing that could be considered as key market mover. Your final figures for services ISM, well, we are expecting that later, but unless we actually see something explosive, meaning a drop below 50 in ISM services or a push above, well above that 50 area, I'm not going to respond to it. All right, so we have some US data. We have second liner data earlier from Australia, and nothing to write home about as far as those data is concerned. So what can we do? So an attempt at an ongoing breakout. Let me draw some Fibonacci's here. This is really big picture. Okay, so we've consolidated quite a bit around the, let me zoom in. So we've consolidated quite a bit just below your 50 fib retracement. You have a convincing close above it last Friday, and you are looking for a follow-through rally. Now, if you look at your chart, this is really good looking. You have this previous consolidation. Sorry, let me change the. You have this previous consolidation from November 2024, and then it was also a floor from October. So I guess what we're saying is that 61.8 retracement at 65.47 is a good price target. Now, I doubt that we're going to get there anytime soon, at least not today. As we said, we don't have much in the way of a catalyst for today. And I won't really expect bad numbers from the US to be excessively good to your Aussie. So let me just go in today, see what we can do with this chart, folks. So bullish as far as the next couple of days are concerned, trying to get to 65.47, but nothing immediate that can be done. Let me go hourly. Okay, hourly, this looks like an ugly chart. You actually have a long wick, and then technically that would have been a bearish signal for me, but that long wick basically just push you back inside your earlier consolidation. So there's this support here around your 64. I think I would surmise that it's about 64.58, 64.59 level. So we do have this series of higher highs, higher lows, higher consolidation zones. So what should we be looking for? Well, it would be nice if you can get another one of these in the hourly picture for Aussie. So a hammer inside your previous consolidation coming from the bottom, that would be a good signal for you to say, okay, let me try the buy side of Aussie at that point. So nothing immediate, guys. Best to look for better pricing. As we said, maybe 64.56. Give us hammers like this here, and we can consider buying. But absent any nice signal, I wouldn't be too quick to jump in and go long on your Aussie. So folks, nothing immediate. And as we said, we don't have a lot of catalyst. Overall trend is for this to be bullish, but nothing here that says go jump in, go ahead already. Let's find something else. If not Aussie, what else is tradable? What about gold, guys? We've got a very interesting chart in gold. Why do we say we have an interesting chart in gold? Because Thursday gave you this long tail. That would have been a bullish, I would say a bullish hammer. Of course, Friday did see NFPs. Now, if we draw Fibonacci retracements, what do we have for gold? Looks like 38.2 Fib retracement. And then a bounce of 38.2 Fib is happening at this point. My only problem with this is that, again, timing is an issue. Without the UK market today, I don't think we have liquidity to really drive things up at this point. So let me go intraday. Yeah, I think you've lost, this has moved quite a bit already. There's no reason for us to say that there's potential to break higher. It would be nice if oh, sorry, we're not looking at gold, we're looking at silver. Sorry guys, I just realized that. I mean, why are these at the 30s? It should be in the thousands. Okay, so let's look at gold after silver. But again, we don't have the catalyst for this. In fact, I tend to think that silver is a poor cousin of gold. Why do I say that silver is a poor cousin of gold? Because there's more, I'd say there's more industrial uses for gold. And frankly, you know, if you look at history, one interesting thing about silver is that at the time when the colonial powers back in the 1900s and late 1800s, at the time when they decided to shift their monetary system to a gold-based system, meaning that for every British pound, German mark, French franc, Spanish peso that the colonial powers issued, they had gold backing the currency. But China actually decided to go the other way. China decided to use silver as the anchor for their currency, and we know what happened afterwards. Okay, so that explains why we tend to think of silver as the poorer cousin of gold. But anyway, so back to the charts. Where do we stand right now? You've got this wider consolidation zone. If you go hourlies, I might even argue that you have some sort of inverted head and shoulder here, and you're trying to get to the neckline of that inverted head and shoulder. You're trying to get to the 3273 region. But do you have a good price for you to jump in? And that's the thing. We do not have a good price right now. I think it's a little too late to try to catch this move. It would have been nice if you joined at the break of the consolidation. So really, it's always either break of consolidation or a bounce after a pullback before you join. Now let me drag Fibonacci's, see what we have. So this is the day's move. Yeah, even your 61.8 Fibonacci for the day's move is around your consolidation breakout point at 30 to 14. So there's nothing immediate here, and let me look for my gold chart. Normally my gold chart is up here. All right, let me just switch that. This is gold. This is silver. Let's take a look at gold. So what's gold's story? It's been rallying ever since Trump got elected. Surge from the middle of April. Pulled back to 50 fib retracement. We have an indecision candle from the dailies last Friday. And we are starting to bounce off that 50 fib retracement level at 32.28. So good combination. Is there something that says I can enter gold already? Not quite. Let me just drag some Fibonacci retracement. So this is your latest upswing in gold. You pulled back to 38.2 fib. That's 32.53, 32.60. So it doesn't look really like it's a very rewarding trade, guys. Technically, this is a cup and handle in your intraday charts. This is your cup, this is the handle. and this will be your breakout point, the 3272 area. So looking at gold, we are bullish. We just want better pricing. At least give me 3253 as an entry point. Give me hammers from here or dragonfly dojis, and I'll be a willing buyer for gold already. But absent that, I'm not keen about jumping in immediately. We don't have catalyst for today, so upside would likely be limited. We don't want to trade a breakout trade when you've seen substantial price action already. So it's a waiting game, folks. Of course, if you do consolidate in the hourlies here and you end up with some form of solid breakout, if you end up with some form of bozu candle, even a maru bozu, then that would be great. That would be your signal to go ahead and jump in. So for now, no entry. What about chasing the upside? Our problem with chasing the upside is that you'll face resistances immediately at 3272. Working rate is at 3261. So yeah, you might end up pushing that high for a bit and not see any follow through. So no chasing the bulls on this one. Let me go back to overviews. I'm really thinking this is going to be a very boring trading day. Go already see here. Let me just delete that. GBP, as we said, there's a holiday, so we can't really expect much of it. Although if you look at your GBP, you seem to have this nice, you seem to be around the support level of this bigger consolidation. So here's your consolidation in the dailies from around 1.30 to 20 all the way up to your 34.28 area. So it's about 200 pips of price action in your, but that's the daily chart, and it took days and took 2 weeks to form that consolidation. Okay, so let me go intraday here. So guys, I think if you're looking at your cable chart, this should really be treated as just another consolidation play. Get anywhere near your 30 to 64 level and you start taking the buy side. So again, if you take the buy side, you want to have hammers or dragonfly dojis or bullish engulfing candles. So nothing for GBP for now, guys. No immediate action. If there's a break of your highs for the day, I'm not keen about chasing that. Primarily because we do not expect to see momentum to kick in and push things. I don't think we're gonna really get anything good at this point, folks. Where should we go? We did see a surge in US equities last Friday. Tokyo, well, I think it's a holiday. Yeah, so Tokyo was a holiday. So I don't really trust that supposed after hours trade that's been going on. Alrighty, so there's not much to look into, guys. Not when we have holidays in Japan and in the UK. Remember that the UK market is about 40% of all forex trading. And the Japanese market is the third biggest forex market. Okay, folks, so nothing for us. Well, let me take a look at your US equities. Of course, US equities are really about Donald Trump and Elon Musk right now. That said, how do things look? You know, you technically have triggered a double bottom in your DJIA. You triggered that. Okay, so I guess what we can do here is figure out where are your supports, where's the breakout point, and see if we can use a bounce off that level. So here's your breakout point. I'd say that that was a nice support before, nice resistance, and now can we use it as a support? How significant is this intraday? Well, it doesn't look too significant. So you have your consolidation lows and before pullback lows right around that area. I would say consider this to be a support level. And again, we will look for bullish candlesticks around this region. So guys, nothing immediate as far as your those concerned, as far as your DJI charts are concerned. It does look like we may be able to look for some form of consolidation from the supports and use that as an excuse to go long. Let me just get back to overview. So, folks, absent anything, any catalyst, anything that could stoke the markets for us, let's just cut things short. I'll see you on Wednesday. And oh, Wednesday we will be doing double sessions. Wow, there's a fire. Wednesday evening for those of you at the GMT +8. So if you're Indonesia, Philippines, Hong Kong, Singapore, if you're in these time zones, Malaysia, then you might want to join that session. We will be developing an EA using ChatGPT, Grok, and DeepSeek. Although I might actually just focus on using Grok. From my experience, it's the more logical of these large language generative AIs. So guys, please join us for that session. will teach you how to make robots without any coding experience at all. And does it work? Well, guys, actually, I was doing a bit of work earlier on that, and let me show you. So for those of you who attended the boot camp last previous week, you are familiar with the Asian session breakout that was discussed by Melvin, and we decided to turn that strategy into a robot. I used Grok heavily to turn that into an EA, and let me show you what happened. So here's the code for that. And is Melvin's strategy really effective? And he can hear this. Okay, I'll show you what happened, guys. So let's open it in strategy tester. Let's load that. Switch to $yen. Remember that Melvin test uses the 30-minute candle for this. Essentially, the strategy looks at the high and low for the first 30 minutes of Tokyo trading, and then just looks for a breakout of that consolidation of that high and low with some allowances for the stop loss. Now we were simulating this with a $100 account because we said, okay, let's try that. Now let's allow for our slippage. So we have an allowance of about 3 pips. Let's just use 0.01 because that, I mean, it's supposed to be 1%, but let's just do something analogous. And let's see what happens when we run this. Well, let me stop that. Let's use custom time because we just used this year's data. I don't want to spend too long on this. And let's run that. Oh, sorry. We forgot to switch to, because the way we did the EA is that you're able to use it on breakouts and other sessions. So let's switch this to 3. 3 in the platform of RockWest corresponds with Tokyo Open, and then allow for the first 30 minutes of trading. And we want the EA to be open only for about a minute. We want the EA to just take a look at the charts and set the place and forget orders. Okay, so this is how the settings should be. And let's do this. So we use a custom period of 20. Oh, sorry again. We wanted to do it from 2025. Okay, the time frame that we used during the boot camp. So do we have it now? Okay, the time's right. Trade size is right. Allowance for the stop loss is right. And okay, here's your EA's back test. Okay, if you look at your charts, you'll see that it does mark where it opened the trade. If it's blue, okay, let me switch this to different colors. Let me go black and white. So if it's blue, if it's a blue line, that means it bought. Or rather, it's a profitable trade. If it's a, well, let's look for a losing trade. Okay, this is a losing trade. But what's the result of the back test? So yeah, here's your result. So basically traded 85 times from January to now. It's not really that accurate. I mean, its profitable trades is 58% of all trades taken. Average profit is about seven. Okay, this is because we're using $100 here, and we're just using 0.01, so just 1 cent, or rather 10 cents. And again, at the end of the 4-month period, you ended up with some net profit of about $44. But again, this is just strategy testing of the EA. Like we said during the boot camp, we want people to know what EAs are doing. We want people to test the EAs for themselves. We want people to test strategies for themselves. Now, guys, if you want a copy of this EA, I'll discuss it with Melvin because this is a strategy that he plans to employ for a service. So yeah, keep us posted, leave a note in the comments, and we'll get back to you on where you can get a copy of this, or if you can get a copy of this. For now, folks, thank you for joining. I know it's a boring trading day. You've got holiday in Japan and in the UK, so maybe later, in about 5 hours time, things will pick up with the open of the US market. Thanks, guys.